Have you ever noticed how money in the crypto market moves in cycles? It's like a merry-go-round. First Bitcoin pumps, then Ethereum, and then suddenly all the smaller coins, the altcoins, explode. This predictable, sequential movement is known as altcoin rotation, and it's one of the most critical concepts for crypto investors. Understanding the altcoin rotation. What exactly is altcoin rotation? It's the phenomenon where capital is systematically shifted from less volatile assets to more volatile ones as a bull run matures. Think of it as a logical, albeit highly emotional, flow of profit-taking and reinvestment. The rotation typically follows a simple, cascading order. Bitcoin, BTC, rises first. As the most established and dominant asset, new institutional and large retail money initially flows into Bitcoin. This establishes market stability and confidence. Ethereum, ETH, follows. Once BTC's price stabilizes, profits start to rotate into the next largest and most useful ecosystem, which is typically Ethereum. Large cap alts, next, capital moves into the other major, well-established layer 1s and blue-chip altcoins like Solana or Cardano. These are the larger, more secure projects. Mid and small cap alts, alt season finally, as the market gets overheated and investors chase greater returns, the money flows into smaller, riskier mid and small cap altcoins, and even meme coins. This last stage is what we call alt season, a period of rapid, spectacular growth for everything except Bitcoin. This phase often precedes a market top as capital becomes overstretched in highly risky assets. Market trends and Newton's first law. Now, let's look at this pattern through the lens of physics. Sir Isaac Newton's first law of motion, the law of inertia, states that an object in motion will stay in motion unless acted upon by an external force. How does this relate to crypto? In the financial world, we can think of market inertia. Bitcoin's initial inertia, Bitcoin has the greatest mass, or market capitalization. Its inertia means it takes a massive force, huge capital inflows, to get it moving. But once it is moving, it tends to stay moving in that direction, pulling the rest of the market along. The external force, profit-taking, the external force that changes the market state of motion is profit-taking. As Bitcoin's price rises, investors sell a portion of their holdings. This released capital is the force that drives the next phase of the cycle. Lower cap inertia, smaller altcoins have very little mass. This is why a small amount of new capital, the force, can cause their prices to accelerate much faster. A small force creates a massive percentage movement. They are highly responsive to the rotated capital. The takeaway: altcoin rotation isn't random, it's a structural feature of a maturing bull market, driven by a logical progression of risk-taking, which is beautifully mirrored by the principles of Newtonian physics. Understanding this cycle of inertia and force helps you to stop chasing pumps and instead position your portfolio before the force, the capital, rotates into the next asset class. With that said, thanks for watching and until next time.